Hi everyone, so today we'll do a stock analysis on Crescent Energy, ticker CRGY, following the analysis on VTLE Energy, considering Crescent Energy is planning to acquire VTLE Energy. So Crescent Energy is a US energy company that engage in the exploration and production of crude oil and natural gas. If you want to reach out to me, so you can look at this medium, so don't hesitate if you have any question or if you want to just share some ideas. Quick disclaimer, I'm not a financial advisor. This is my own research, up to you to make your own decision. So here is the usual summary that we're gonna go through. So gonna do the description, look at the asset, the unit cost, the reserve, talk about as well the acquisition. Then we're gonna do the fundamental analysis, look at the statistic, 4-year analysis, the usual, look at insider ownership, and then the technical analysis with the stock and the price catalyst, and then we end up with a conclusion. So let's start with a company profile. So Crescent Energy Company is pretty much like VTLE Energy, which is exploration and production of crude oil, natural gas, and natural gas liquid in the United States. And they're mainly focused in Texas and Rocky Mountain region. And it was founded in 2011, and the headquarters is in Texas. So let's talk about the assets. So to start with, there is pretty much two parts. So it's called Rockies, which is there, and Texas. So apparently, if I understand it right, they say that there is 25% of the production in Rockies and 75% in Texas, to give you an idea. Actually, the mineral cash flow higher in there shows that there is 40% in Eagle Ford, 25% in others, and 35% in Rockies. So it's not exactly the same, but you get an idea between cash flow and production. And so there is 3 main mines or place where they extract oil and gas, which is Eagle Ford, Uinta, and Permian position. So the major one is Permian, which is in the top 15, and it's located in Texas. The Eagle Ford is as well located in Texas, and the Uinta Basin is located in Rockies. So here's a slide where you see all the diversification in production for the liquefied natural gas at 18%, the gas at 42%, and oil at 41%. So I would say it's kind of like 40% oil, 60% gas. So usually, I tend to look at bigger companies. This one is a little bit smaller in terms of projects, but I still think the way they kind of explain their balance sheet, return on capital, and return on investing seems to be like more professional than the one I usually see. So they show you how they leverage. So they are 1.5, the yield around 8%, and like what I'm trying to say is like they seems to be managing pretty well their company, in the sense that they don't really sell you an idea, but they prove you with numbers that what they're doing is like reasonable, or let's say, and that's what I like about this slide that I've seen. So it doesn't confirm anything, but it looks like they really have an advanced level, and like it shows that they know what they're talking about. So in these slides, we're gonna talk about the debt and leverage. So as you can see, the current leverage that we said previously is 1.5x, and most of the debt is actually further than 2032 to 2034, and like I think around 1 billion is to be repaid in 2028 and 2029. So which give plenty of time to repay, to be honest. So that's interesting. And the percentage, like is around like 7% to 9%, so they have to repay between 7 and 9%. So I think it's a bit high, but still reasonable. I would still prefer them to try to repay their debt as quickly as they can, unless they have really interesting project to acquire. So talking about acquisition, this is the way they actually grow. They seems to be pretty much acquiring new projects all the time. So this is their slides explaining how they do it, and that's pretty much their main strategy. So as I was talking in Vital Energy in the past video, these guys, the two actually with Crescent Energy, they are actually hedging. So it's interesting to see like that they are actually protecting the downside and retaining attracting upside exposure with swaps and collar. So it's the kind of things you do as a option trader. So it's interesting to see that around here, and they say that they are 60% hedge on oil and gas. I still don't really understand fully, to be honest, so I won't really comment on that, but it's just interesting to see how they do that. I wanted to find the unit cost for all their oil, natural gas, and NGL, but I couldn't really find a promising number that made sense to me. So all I can show you is the realized price that they have been using with and without leverage. So $61.5 in June 2025 for oil, and 64.27 with their derivative, then 2.7 in natural gas and 2.6 with the derivative, and 22.59 and 22.48 with the NGL. So it's mainly an improvement in oil. That's where they've actually benefited the most from their leverage. Their derivative. So that seems to be working fine for them, more or less, it seems. But yeah, and you can see after the expense and everything, but it's not very relevant. It's not really what I wanted to get out of it. Again, in these slides, it's just confirmed that they seems to know what they're doing and then explain all that, but at the same time, it's very hard to understand their language. It seems to be very specific to the oil and gas industry, and unfortunately, I'm not really knowledgeable in that area. I just know the basics. So in terms of reserve, all I can say is it's around 9.7 billion that they have, and I don't know what the 1p means between 12, so let's say around 10 to 12 billion, which is a bit more than a market cap, something like 4-5 times. So it seems to be matching with what I usually see, to be honest. But yeah, I wouldn't really rely on that either. I couldn't get very precise information where I was confident, but I give you an idea, and you can look it up if you find more information. So in the previous video, we talked about the Vital Energy Company, and because they were an acquisition at that same time by Crescent Energy, so I decided to pretty much talk about it. So now let's get a reminder of what that acquisition was like. So it's a merger agreement, so that means they will all merge into one company. So Crescent Energy is to acquire Vital Energy in all stock, and then Vital Energy will receive 1.9 share of Crescent Energy, and then which represent 5% premium and between 5 and 15% premium basically. So at the end, there will be 77% of Crescent Energy, and there will be 23% of Vital Energy. So what I was saying in the previous video, you can have a look, but just quick summary is that Vital Energy, so in terms of the side of Vital shareholder, it seems to be a really bad deal, but in terms of if you already have Crescent Energy, I would say it's kind of a good deal, because they're trying to buy VTLE Energy for a really cheap price, in my true opinion. That is really cheap. So yeah, in that sense it's interesting, but I'm just confused why the VTLE shareholder are, or should I say the management, are actually interested in that. I was hoping they would ask for a bit more, because I think even 30% higher would be very reasonable, and it will help the shareholder that have been really hammered recently. So I think this slide is a good summary of that acquisition between VTLE Energy and Crescent Energy. So the thing is, the part in blue in there, in blue and blue light, is actually what Crescent already have, and the growth opportunity, which is VTLE Energy, is all the yellow. So it's the same for that. So those two are actually in Texas, so if you look at the size, the land size, it would really increase Crescent Energy. So I actually find it interesting, because it seems that Crescent Energy have way less land than VTLE Energy. By the look of it, I mean, it means nothing, because they may have nothing in there. They might not find any oil or gas, but it's still interesting to see that it looks like a massive acquisition for them. Finally, in terms of the VTLE Energy acquisition, we would see all these improvement when they are like merged together. So it seems like to be really benefiting in a sense. So you can see by yourselves in more detail, but it is definitely, I mean, both companies are undervalued respectfully. So I would say that it wouldn't be a terrible merger at all, but just would say that in terms of VTLE, they would be a little bit disadvantaged compared to Crescent, although both seems to be struggling at the moment. We'll see that later. So now let's look at the fundamental. So the market cap is $2.2 billion. The trailing PE, so it was like at 20 and potentially going to 5. That will definitely be affected with the oil price. So if oil price increase a lot, they will have very low PE. Then the price to sell, price to book, like enterprise to revenue and EBITDA, I mean, it's all really slow, really low, and the price to book is under 0.5, always good to see. Then in terms of the income, they seems to be profitable. Then their cash is very low compared to their debt. They only have 1% of cash compared to 3 billion in debt. So yes, they have assets to back it up, but in terms of cash, they seems to be pretty low on it. Then after that, they have 4% insider ownership with 95% institution. So this is pretty much all professional investors, hence the reason why their presentation is a bit hard to read. And there is quite a few short as well at 7%, and then they're giving between 3 to 5% dividend at this current price. So yeah, it's pretty reasonable in terms of fundamental analysis. Overall, it's pretty good. So now let's look at the graphs, so how it looks, the fundamental analysis over the past 4 years. So in terms of the last 2024 balance sheet, we have pretty much fair amount of equity to liabilities. So it's not like way more liability than equity, 50-50 more or less. Then we have a huge expansion of equity, which is nicely followed by debt. So if pretty much big growth in debt, and then pretty much no improvement in cash, stays low. So yeah, it's definitely a big, like a growing company that is growing very fast, which is great. If oil prices in the next few years rise, it would definitely do amazing, but if they don't, they may have problems with debt for sure. So in terms of the current asset to liabilities, this is not what I like to see. So maybe the growth allowed them to take more risk and allowed them to have that, but usually you don't want to have current liabilities higher than current asset, and current asset should be at least double the current liabilities, so able to pay within a year. So the balance sheet is growing very rapidly, as you can see again, and then like the equity is rising fairly well, and the liabilities as well. So yeah, if they can reduce their liabilities in the next few years and maintain their equity or even increase them, that would be fantastic. If not, if the oil price stay very low, that would be quite a problem. In terms of the revenue and net income, they don't seem to have a great net income at the moment. In 2021, it was kind of negative. 22 and 23 was okay, but very low, and 24 it's been pretty like a little negative. Then the earning per share just proved the same, pretty much same idea. Earnings is falling and the revenues are similar, to be honest. So the cash flow, they not doing great either, because they all negative. Capital expenditure is rising a bit, but nothing that great, to be honest, not that great. They will need hopefully to become cash flow positive to really get me even more excited, let's say. But I like their growth, and I find that interesting. The share issued is definitely not good. When you see in the past 2-3 years, it's pretty much triple or quadruple. I mean, this is not great. So they are funding their growth with lots of shares, so they're diluting and growing. So as long as they do it like properly, it might not affect the shareholder short term, but it doesn't benefit them for sure. So they will have to buy back their share and then pay back their debt to then really have improvement in terms of shareholders, but at the moment it's not really the case. In terms of insider ownership, honestly, I couldn't really make sense of it. In US, I really struggle. Like one says they're all selling, the other say they're all buying. I can't really explain, but I've seen a lot of sell and a few buy in one. And in another one, it's pretty much only buy, with one director that is doing scheme Michael, that is actually increasing, because you can see from there he had only 200,000 share and growing to 250. So at least this is a little positive compared to what I've seen. But I mean, and the other is Rocket Charlie David, same. He went from 60 to 18 there, and actually to 110. So that seems to be definitely directors interested. So that is a little more positive, at least. So the trading history is pretty short. It's been since 2022 that they are actually public, and I would say that it hasn't done anything great. It's just been going sideways and pretty much going on the downside. So at the moment it's still going on the downside. Nothing much to say, but let's say waiting for a reversal or a setup, but at the moment it's not looking good. In terms of the daily, we have pretty much the same scenario. I'm going down again pretty strongly and trying to get back, but very slowly. So I still think we are on downtrend. We broke again here. So let's see what happened. I wouldn't say you have to hurry if you're interested to buy. I kind of have some interest in oil though, because like on the weekly in here, we've seen like a kind of a oil going from 80 to 90 or 100, I forgot, to around like 60 something to 65 at the moment. So it's looking good for reversal. We may have a little proof here with a break here that went higher than this. But I would say to really confirm that, I'd love to see the price rising here. I think it's around 70 to 75. Can't see it here. But yeah, in my opinion, that would be really good confirmation. But it's still looking quite good. So let's say it's not perfect, but may have a change of trend. So for oil on the daily, so I quite like that it kind of broke here again compared to here. It's pretty clear, and then now we are in between those range. So we went back slowly, and then now we seems to be like following that trend line here. So I'm hoping it breaks here. So again, at least 65 to a bit more, and then like hoping that from there we're gonna go for at least a small uptrend. But to me, anything above here will be really kind of positive. Until then, we don't know, but I would say over 70 or 75, that's when the oil stock will have a much better like earnings, because at this price at 60 something, it's definitely not great. So in conclusion, all we can say is that for an advantage, I would say the company is growing rapidly, so this is actually good. And then the valuations are pretty cheap, so they're not really cash flow positive or making like great cash flow yet, but they are their assets are really worth more than their debt, and that makes it like a cheap company. So when the free cash flow will come, like a proper free cash flow, that will definitely benefit them. But oil price and natural gas price needs to rise much higher to really benefit them. The oil price is still not great, but could potentially reverse soon, so need to watch closely, and I would say it could be an advantage if it start to rise properly. Right now it's a bit early to say, but it could be an advantage. Then the acquisition, in my opinion, makes perfect sense for Crescent Energy, but a little less sense for VTLE. So that's my opinion, but at least for them, it seems to be an advantage for sure. Then the leverage stock is one of the risks, because it could potentially go bankrupt. So if the oil prices stay low, so the thing is they are hedging, so it might help to prevent that, but it doesn't guarantee anything. Then we have a share dilution. So the share dilution seems to be pretty big and growing quickly, so I don't like that. So but if they can maintain their growth, it could just at least neutralize the pain. Then at the end, I would say the technical analysis is bearish on daily and weekly, so this is a big risk that it's continue to go down. So that's it for this video. I hope you enjoy, and see you in the next video.